But where should you be buying? Should you be buying the core or the periphery?
Good morning. From our point of view, clearly the Fed not tapering, not starting the tapering process has given very significant headwinds for European rates markets in the first place. For us, over the near term, we see good value in bonds at the current level, especially given the fact that we move very likely in elevated expectations for the upcoming data over the next couple of weeks. Bonds, from our perspective, over the next weeks have the potential to go in the vicinity of 175s and 10-year yield levels.
175?
Exactly.
Okay, because so far, bonds, as you say, are outperforming the periphery. When will that start to reverse, or when will the periphery start to catch up?
In general, like you see already peripheral bonds performing from outright perspective, and also with near-term liquidity fears abating after the Fed didn't decide to taper, and the entire process might well be delayed into 2014 now. So this is against the backdrop of an overall improving economic outlook for the periphery. This should be generally be supportive for risk assets.
Talking of the front end of the Spanish curve, today we had an auction from Madrid. It was 3- and 15-year bonds, but the 3-year yields were sharply down from the last auction, in large part thanks to the action or no action from the Fed last night.
Yeah, in general, we have seen a very strong performance already of Spanish paper over the past couple of days. So this is something, if you have an environment where credit fears are abating, this should show first and foremost at the front end of the curve. So with the Fed not tapering, and so ultimately liquidity fears are moving out of the spotlight for the next couple of weeks.
On the spread, we had a chart there of the 10-year Spanish-German spread. It's around about 245 basis points. How much more downward, how much lower can that spread go?
Well, ultimately, over the long term, we see significantly more compression potential. Let's say until year end, we see 20 to 30 basis points is certainly still on the cards. But clearly for us is that the front end offers the better risk reward from that perspective, also having a significantly better carry profile than the longer end of the Spanish curve.
We're talking Spain, we're talking Italy. How would you trade the two of them together? Because the yield crossed over for the first time in 18 months fairly recently. Do you see that trend continuing?
Over the near term, I would say, given that we still have the political tensions in Italy prevailing, that Spain clearly has an edge. However, once that is resolved, you have to consider that the BTP market is clearly the more liquid market compared to Spain.